Good morning everyone and welcome to this update from Interim on late payments and debt collection trends across the Nordics. Over the past 8 months, the world economy has gone through more turbulence than it would normally expect in 8 years. But what does this all really mean for us up here in the Nordics? To answer that, we have with us our chief analyst, Morten Trasti. Good morning, Morten.
Good morning, Eivind.
Do you manage to keep up with all this, everything going on overseas these days?
Well, I try my best, but I guess something slipped my mind as well.
Yeah, I see. That's normal. But I know you have a lot to cover, so I'll leave you to it.
Thank you very much, Eivind, and thank you so much for joining us this morning here at Interim. For the next 20-25 minutes, I will walk you through the latest debt collection numbers across the Nordic region. And as you might know, Interim is the market leader in all 4 Nordic countries. So we have representative data across the region, and we do some small adjustment to that data before we show it here on this webinar, and that is that we don't want the data to reflect changes in our market share or our portfolio buys. So we have adjusted for those numbers to give you a generic approach to which way late payment and debt collection cases are moving at the moment. And Eivind just mentioned the news coming in from the United States, and I've been stealing the famous Bill Clinton 1992 election campaign quote here, which says it's the economy stupid, which was a reference to everything boils down to economic activity. And indeed, that is the case for our debt collection numbers, as I will now walk you through. Once again, we have divided this presentation into 2 parts, where we first take a closer look at the consumers, and then we will have a closer look at business payments in the end. So, in a world full of risk and kind of a dark world we live in these days, Nordic consumers tries to take on as little risk as possible. And that is also a typical feature that you see after a crisis, being a health crisis, an economic crisis, after bad news, or when bad news are continuously coming in. Each consumers have a hard look at themselves and say, well, how can I be best possible prepared for the next bad news? That I don't know what is it, but I guess more bad news will be ahead. And the most common thing to do in such a situation is to take on as little risk as possible, and that is indeed the case across the Nordic region today, that we have very risk-averse consumers, and they tend to save in what they can instead of spending and lending and spending over their own financial ability. But let's start by looking a little bit further on the cost of living crisis, here represented by the inflation numbers across the Nordic region and the euro area as well. And as you all can see, the cost of living crisis kind of peaked in the winter of 2022-2023. Prices has broadly come down again and are now close to or just below the target of an annual growth in inflation 2%. Only exception here is the Norwegian inflation. As you can see there, it's still above target. And when the inflation is below target, you typically lower the interest rates to boost demand to get prices increasing again. But when inflation is above target, you typically want to increase your interest rates to lower domestic demand. So inflation, or all Nordic economies, has an inflation target monetary policy, which means that inflation is the main or the dominant factor when we are setting the interest rates, or the central bank is setting their interest rates. And the inflation numbers, and that become very, very visibly here when we look at the interest rates numbers. So if we take the top interest rate first, which is the Norwegian policy rate, it was lowered by 0.25 basis points just before the summer, but the Norwegian interest rates is now well above the rest of the Nordics when it comes to monetary policy. And that means that if we disregard the Norwegian consumer for just a moment, the consumers and the heavily indebted consumers in Sweden, in Finland, and Denmark has a lot less interest payment now compared to a couple of years ago, while that is a persistent problem for the Norwegian consumers still. But overall, the time for high inflation and high interest rates are well and truly behind us for this time. It's bound to happen again, because in 2020 the discussion was that interest rates and inflation will never rise again, and so it's all about the cycle, I guess. So when all those money don't go to interest payments like it did a couple of years ago, maybe that money is now spent on consumption, but that is indeed not the case. If you look at the retail trade here across the Nordic region, you can see that if we start by looking at this period, retail trade went up as lockdowns, etc., appeared here. Then there was the rebound in retail trade once everyone had bought new sporting equipment and didn't need anymore. And then things has sort of normalized since then, but consumption numbers are fairly weak between 2 and 3 percentage points, which is not a lot, and especially given that interest rates are so much down. With the exception of Norway, one would expect spending to increase and domestic demand to increase once interest rates are lower, but that seems not to be the case. And as a consumer, you only have two possible options when you receive additional money. One is to consume and the other is to save. And that again transmits into, so when lower interest rates have primarily increased savings rates and not consumption. And that again is down to the risk aversion, that you want to be prepared for the next bad economic news. And the best way to prepare is to put money in the bank or a different kind of saving and not spend it today. And that indeed seems to be the case across the Nordic region. Looking more broadly then at the economies, and again, I think you will see that quite clearly in both the labor market data and the bankruptcy data as well, that there is a sort of Nordic division going on here. So the Corona crisis, as you can see here, as the first dip, then we had a common rebound from the Corona crisis, and for the last couple of years, you can see that the Danish and Norwegian economies are growing at quite a steady pace, while Sweden and Finland are struggling more with their overall economy, and the economy is performing much worse in the east compared to west and south region of the Nordic countries. And that again transmits, of course, into the labor market data. So as you remember, the Norwegian and Danish economy performed quite a lot better than the Finnish and Swedish economy, and that is again visible in the unemployment data, where we can see the Danish and Norwegian unemployment is hovering between 3 and 5%, and there's not a lot of growth there going on as well. We have had a little upswing in Norwegian unemployment during the last 10 months, but that is mainly due to an increase in labor supply and not higher unemployment. So the increase is almost exclusively related to more people that previously were without a job and not a part of the labor market are now coming into the labor market again. And when that drives unemployment, it's a reason, not a reason to be pessimistic. When we look at the unemployment numbers in Finland and Sweden, we can see that the growth rate over the last couple of years are quite a lot bigger compared to the labor markets in Denmark and Norway. And I guess the good news here is that the growth momentum in unemployment has stopped during the first half of 2025, but still the levels are at quite high, just around 9% unemployment. But at least the momentum in the worsening momentum in the labor market seems to have stopped during the first half of 2025. And I was a little bit on this topic just a few moments ago, that risk-averse consumers are not really interested in taking on new debt, as new debt means more risk. And if we start by looking at housing credit, you can see that across the Nordic region, when interest rates started to move up, loans started to move down. Then interest rates were moving downwards again, and credit has started to grow or not to fall as much as it used to. So there is a small positive momentum here, but still for the quite sharp decrease in interest rates, it's a small effect on the demand for housing credit, which again means that the consumers are being quite risk averse. And even if a mortgage has become a lot cheaper during the last couple of years, except for Norway, of course, the consumer are not really interested in taking up more debt, even if the price of that debt has been reduced significantly. And the same could be said on consumer credit. There as well, one would expect, as interest rates started to fall in 2022, or the second half of 2022, one would expect lending rates to increase, but that has not been the case at all. And again, consumer credit has a lot more risk attached to it than housing credit, and it is again a clear indication that the Nordic consumers are avoiding risk as much as it possibly can. And we now have growth rates on consumer credit just around as you were, or from -2 to +2%. And in a high inflation environment, that means in real terms, consumer credit has fallen during the last couple of years as inflation or have grown at a faster pace compared to lending growth. So the real value of the consumer credit has fallen the last couple of years. And of course, the debt collection numbers are highly influenced by the credit given. So less credit given means, all else equal, less debt collection cases as well. So when we kind of sum up the Norwegian, the Nordic consumers there is at last, one might say, a brighter future ahead. And that is due to the cost of living crisis that's now firmly over. Real wages are expecting to grow across the Nordic in 2025, which means that wages are expected to grow at a faster pace than prices across the region. So purchasing power is on the way up. Even if the purchasing power is on the way up, we tend not to use that money for consumption, but for saving, which means that we will be in a more solid financial position in the future compared to what we are in today. And it's also worth to note that the economic performance and particularly the labor markets are looking much better in Denmark and Norway than the case in the eastern Nordic region, which consists of Sweden and Finland. And all indicators shows that consumers are being risk averse. They don't want to take on risk, which means again that the people that are coming into debt collection are not people that have lived a lifestyle above their means for a period of time before they go to debt collection, but are more in the kind of category struggling to make ends meet in a difficult economic environment. So with that said, we can look closer at the debt collection data. And I did mention a brighter future ahead. And looking at the annual growth in debt collection numbers here, the 2025 numbers are the first 7 months of 2025 compared to the same period in 2024. And if you start by looking at the overall picture here, you can see that the green boxes are consequently lower than the purple boxes, which means that the debt collection numbers or the growth in debt collection numbers are declining across the Nordic region. They are, if you start by looking at the Norwegian data, debt collection cases are still growing, but the growth momentum is cut in half. In Sweden, after a couple of years with a quite steep upturn in debt collection cases, which is again related to higher unemployment numbers. It looks a lot better so far in 2025, which again relates to the easing off in the labor market. And of course, lower interest rates means more money to pay down other sorts of debts. Finland, again, it's the case that the debt collection numbers are quite not so much, but they're down there as well. And in Denmark, after a particular strong growth in 2023, debt collection numbers are again falling. So good news all around from the debtors' perspective. And if you look on the amounts to collections, so this is the average principal amount and the growth rate for those during the last 2.5 years. Again, quite positive news. The average amounts in Norway is around the same as they were last year. In Sweden, they are dropping quite sharply, and in Finland as well. And two things to mention on that part, and that is, of course, those countries have had much higher unemployment rates, which have eased off, and lower interest rates also means less banking claims, which again pushes down the average principal amount, as the number of debt collection on banking claims that tends to have a high principal amounts are falling as the interest rates falls as well. Denmark, it's a slightly different picture, but again, there's the delay, the inflation effect seem to have taken quite a bit longer in Denmark compared to the other Nordic countries. So amounts and the increase and now decrease in amounts can be explained by two different main key drivers. Key driver number one is banking claims during the period of high interest rates. Banking claims were going more and more to collection, pushing the average amount to collection up. and the effects are now reversed as interest rates has fallen quite a bit. So that's the first key driver. The other key driver is the delayed inflation effect on debt collection claims, because our clients they increase their prices to they send a bill on that on the new price, then it has to go to collection, and then it will appear in our data. So there is a time lag here between the timing and the time where prices are increasing in the market and when that price increase are transmitted into the debt collection data. So good news on the amounts as well. And if you then take a kind of a overall look at the cost of living crisis period, which we have set to a starting point at the end of the first quarter in 2022, we see that we are now approaching the same level of debt collection cases as when we started, and that is seen particularly in the lines in Sweden. They're going down. So cost of living crisis did not create a permanent worse level of debt collection cases. So I think it's safe to say that even though we are not maybe out of the woods yet, things look much better. And the same is true for the amounts as well, even if amounts have moved quite a bit more compared to the debt collection cases. Still, the signs are positive. Amounts are going down, even if inflation is still moving up or it's close to zero. So once that effect is taken out as well, I think we have landed, broadly speaking, on our feet. So debt collection data then provides kind of the same picture as the economic data, which is again a reference to my Bill Clinton quote at the start of the webinar. Slower growth in debt collection cases in 2025. Amounts to collection increased more than the number of cases during the kind of cost of living crisis, which points to it being a more individual than collective payment problem. And it's quite hard not to be optimistic for the rest of 2025, as it's widely expected that the purchasing power and real wages will continue to increase during the second half of this year. And unemployment numbers, particularly in Sweden and Finland, seems to have lost the momentum going upwards, which means that less people will get into payment problems because they have lost their jobs. And of course, indebted households now have a lot more money to pay their bills when interest payments are down, with again the exception of Norway. So hard not to be optimistic for 2025 or the rest of this year. Speaking of optimism, we see a slower growth in late business payments as well. And again, I have to remind you of the economic situation and the differences between Norway and Denmark on one side and Sweden and Finland on the other. Here are the bankruptcy data for all four Nordic countries, starting before the pandemic in 2019 as a basis here. And here you can see that particularly since the start of 2024, there's been a clear division in bankruptcies, and that is again, it's easy to see the connection here between bankruptcies, unemployment data, and GDP growth as well. The worst GDP numbers, higher unemployment, has, as one might expect, transmitted into higher bankruptcies numbers in Finland and Sweden on one side, whereas in Norway and Denmark, bankruptcy numbers are back to kind of normal level, which is not currently the case in Sweden and Finland, which is well above the kind of previous normal. Looking then at the debt collection numbers, it's reasons to be optimistic here as well. Here are the number of debt collection cases, and as you can see in Norway, Sweden, and Denmark, number of debt collection cases are decreasing for the first time since the government introduced different kind of insurance policies against bankruptcy. It's the first time since those policies were lifted that we see debt collection data again going down after growing both in 2023 and 2024. The only exception here is Finland. But again, if we look at the kind of historic data in Finland and compare that data to the other Nordic region, they had quite an unexpected downturn in the debt collection data in 2024. So there is some basis effects here as well. Not very surprisingly, maybe the number of debt collection cases are kind of stabilizing above their 2022 levels. So they're not kind of back to where we were at the start of the pandemic. And that is, of course, even if inflation and costs have stopped increasing as much as they used to, they are still, the average bill is much higher today compared to where it was in 2022. And looking at the amounts then, we see that the amounts has increased as well during the last couple of years. So if it kind of tries to sum it up, debt collection levels are around 20% higher in currently than they were a couple of years ago. Slower growth in 2025 with Finland as the notable exception. Amounts to collection follows inflation. Bankruptcy data are driven again by economic activity, and again Sweden and Finland looks a little bit worse compared to Denmark and Norway. So to sum it up in 1 minute, I think the overall message here is that the debt collection data shows that there are improvements all around the Nordic region. So that's both on the consumer side and the business side as well. Things look a lot better than they did only a year ago. And I think it's also good to have in mind that there is, if you look at the Nordic region and if you work in the Nordic region, it's quite clear that the Nordic region can be divided into two different parts, with Sweden and Finland on the one side, which has a real struggle, and Denmark and Norway, which looks a lot better. So keep that in mind going forward as well. So that was all from me this time, Eivind.
Thank you, Morten. It's good to hear that the future looks a bit brighter now. And thank you everyone for watching. I wish you a great day.